Hello and welcome to My Finance Teacher. Today is 23rd of March 2018. I hope everybody is having a nice day. Just as we expected with the rate hike pressure off the gold price, it's been moving upwards over the last 2 or 3 days, over the last 3 days. And one of the helping factors there has been the US dollar that has difficulty going through this 50-day moving average. And if the US dollar doesn't get its act together and doesn't break above this 50-day moving average with some force relatively soon, then it's going to be in danger of breaking down further, having not being able to breach the 50-day moving average resistance zone. That actually might tell us that this intermediate cycle that I thought has been going on since September until about a month ago or so might continue. The decline with this intermediate cycle, within this intermediate cycle, might continue, giving us a slightly longer intermediate cycle and also giving us a sort of a B, C decline within this intermediate cycle. So we will have to see what happens over the next week or two. If the dollar doesn't break above, then there is a potential for a continued decline within the intermediate cycle, giving us a lower low. And actually that's often how intermediate cycles end. Moving on into the future, what is the potential for gold price? Well, again, I expect some decline in gold price going into May, the early part of summer. And that's actually historically been sort of a difficult time for gold. If we look at, this is a monthly chart of gold. If we look at May, here, that's May, June, right? So another May over here, an upward move in early year, in the beginning of the year, then doldrums in the summer. Upward move in the beginning of the year, doldrums in the summer. And again, where's May here? Over here. May has been red over the last many months, except for this exception, but there was a lot of downward movement in May 2017 as well. Plus, we're going to be in the time band for an intermediate decline, so again giving us a high likelihood of a red May and red June. So for that reason, I think we're going to see only a temporary bounce up in gold price. I don't think it's going to last long. Maybe another week or two is left within this upward movement, and I don't really think we're going to break that much above, say, 1370, 1360, something like that. So I expect this daily cycle to move upwards for relatively short term and then give us a relatively long decline with a lower low. A lower low will of course indicate that finally this intermediate cycle will have finished. And lastly, one more thing I wanted to mention. Look at this monthly chart of gold again. This is a 2-year moving average, that's 2 months moving average, and gold price has been below this 2-year moving average since 2011, 2012, since those all-time highs. And over the last couple of years, gold has been below this moving average. Gold has been below this 2-year moving average in only like one, this month, that's January 2016. 2 and say 3, we closed here below the 2-year moving average, whereas this month, January 2017, closed above that moving average. So since the beginning of 2016, we've been below this moving average for only like 3 months. So there's just another indication for you guys, another reminder for you guys that in the longer term, we are likely to see an upward movement in gold. Thanks for your attention, and bye-bye.